Hey guys, Cody Barton here. Welcome to my channel. In this video, I'm going to be talking with an expert on taxes. And if you haven't already seen the previous video that I did on do you need an LLC set up when you're going to be wholesaling real estate or fix and flipping real estate, make sure to check that video out, because right now we're going to be talking more specifically about what type of deductions you can take when you have an LLC set up so that you can make sure that you are paying the right amount in taxes, which in my opinion is always the least amount in taxes that you can. I have a guest again here, Tommy from Prime Corporate Services. Let's just get into it. When we have an LLC set up, what are some of those general deductions that people are able to start taking to reduce their tax liability?
Thank you for having me back. The tax deductions are much more exciting than the protection, so I'm excited.
Yeah.
When you're first getting started, I mean, if I had $1 for every time someone asked me, should I set up a business before I do my first deal? A lot of times what I help them understand is what the IRS is looking for is that you are showing the intent to treat and operate something as a business. So by setting up a business entity, you allow yourself the ability to do that, which then allows you to take additional business deductions, even if you haven't done your first deal, even if you haven't generated income. So what I would ask you is, have you paid for subscriptions, education, coaching of any sort, softwares, right? Those are all things that are business related to help you grow and to help you scale even before you do your first deal. So that's why I recommend setting up the LLC from the beginning to take advantage of those additional startup expenses and startup deductions.
Now, so what you're saying, Tommy, is even before I actually start making money in my business, I'm able to start categorizing and receiving deductions because I have that LLC set up. Because I started my business, I went out, maybe I got the batch leads platform to start pulling lists to be able to market to. Maybe I've spent some money on the sub-2 coaching community or different coaching products like that. Those are all things that I can use as potential write-offs. That's what you're saying?
Yes, absolutely. Make sure that you have a great accountant or an excellent CPA that understands how those need to be categorized. We want to play by the rules, right? But the tax code is insanely long, and it's set up for people to take advantage of it, especially business owners, right? So if you've made those investments, if you've invested into your future and into your future business, then as long as you have some sort of taxable income, let's say that you have a W-2, you go to work 9 to 5 every day, but you don't make any money with the business, they'll still flow through. It'll still allow you to maximize, get a larger tax return, or pay less in taxes, right? If you don't have any income, you can still show those losses and carry them forward to the next year. So good or bad, profit or loss, show yourself as a business, track your business-related expenses, and allow yourself to maximize on either a larger return or paying less in tax to then go and grow and scale your business.
So a question that I have for you, Tommy, that I know a lot of people probably wonder as well, because people ask me this is, I have $100,000 that comes in, I have my LLC set up, and I went out and I spent $50,000 on marketing and other expenses. How does the IRS look at that? Am I now paying taxes off of $100,000 I made? Am I paying taxes off of just $50,000 if I spent $50,000 on marketing? How the heck does that get broken down?
Great question, for sure. Let's say that you make a gross $100,000. And in order to get to that net $50,000, we wrote off the marketing, we wrote off the softwares, the coaching, the education, phone, internet, home office if you have one, right? And we have that $50,000 left. Strategize with a professional. Strategize with an accountant or a CPA, because there could be a time where that income level at $50,000 left, maybe we change the LLC so it's taxed like an S Corp, right? Now what you get to do is you've already taken your deductions to lower paying tax from $100,000 to $50,000. You pay yourself a salary or a distribution, but it also allows you to avoid half of that self-employment tax.
Now you're talking about S Corp. We just figured out I need an LLC. Now you're saying I need some S Corp thing because I made $50,000. Like, what the heck is that? How is that different from an LLC? And you're saying that I could pay less in taxes if I have the S Corp based on the amount of money that I've made. Like, I want to unpack that a little bit. Like, what is an S Corp? What does that actually do for me? And why is it that that amount that I should have an S Corp set up?
Not all entities are set up the same, right? When you set up an LLC, there's different ways you can tax it.